Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 29th of March. All right, bit of a correction back, a little bit of a bounce back in the US equity markets. Okay, takes a bit of the heat off the year-to-date sort of situation there. Doesn't really give us a lot at the moment. US equity futures aren't really doing much. A little bit of blue, which is positive. We're seeing Euro, Sterling, Aussie, Kiwi go up a bit. It's a little bit weird because we are seeing the commodities come off somewhat and metals. So it's a bit of a tricky one. Now, let me just sort of run you through the charts, give you an idea of the global backdrop. Okay, the dollar index, the US dollar, well, it's slowly going up. It's just sitting above the support trend line there on the index. Euro, after dipping down from 80 to 50, took out some stops back in the range. Not a hell of a lot there. The volatility index is back to normal levels. Tells me the market is very comfortable with what is happening in the Russia-Ukraine situation and anything else for that matter. Oil, well, it's drifted back down through this pretty flimsy, right, support trend line. When you see an orange trend line on my charts, it means there's only like 2 touches. It's not really significant at all. So I usually put that there just to let myself know that it's nothing serious, really. If it's got to break 98 for it to really fall out of bed. The equities, well, they have come back. I still think they're in trouble for the year, especially with the Fed, other central banks all talking about raising interest rates. Always generally means lower equity markets. We've had like low interest rate markets for like 10 years. It's about time they changed. Geopolitically, there's been a lot of talk about money going into the cryptos. You can see the recent move, so I can't discount that as being a true thing. Commodities, big driver for the commodity currencies, in particular the Aussie. It has sort of, the worm has turned a bit here, right? So I'm starting to think we might see a bit of downward pressure on the Aussie dollar, but we're not really seeing it just yet. Dollar yen is massively through the roof. It's got about 10 cents to come down before it gets to sort of normal levels. So you're probably waiting for, you know, the whole geopolitical rumblings to stop before that starts to happen. Dollar CAD, well, it is lower, but I mean, it's dealing with all those massive oil fluctuations, right? It's not an easy situation to be trading. And here I've left Euro. You can see where it was yesterday, down to 50, back into the range. And looks like Sterling's found a bit of a home around 131. I can't work it out at this stage. But I know that the Aussie's up here because of the commodities, so I'll be keeping a close eye on that. And the Kiwi just following the Aussie there. Equity markets, well, there's not much to really sort of look at here on the charts because they all look the same. And it looks like just someone's just stretched a big string of spaghetti and sort of lashed it at the screens. The up and down, they're coming back a bit. I think it's a bit of a relief rally. As I said, the main interest rate moves haven't happened yet, but they are on the way. And I think the volatility we've seen across the board here in equities is a sure sign of that. Commodities, this is where the action is. These are starting to break down. Copper as well, a little bit of a reprieve here, but across the board, iron ore is holding up. Could be the only thing holding the Aussie up. And you've got light crude and Brent crude down. That's the CRB, it's coming off. It's going to be interesting to see how that one plays out. I come back to the currencies, just having a look here, just keep an eye on it. I mean, you're almost got to humor me with this one. We've got the fundamental data, that stuff does still exist, right? We've got some US numbers out ahead of the Friday's non-farm payrolls, but just keep an eye on it because it will come into play. Some of these numbers are pretty big. GDP numbers, consumer confidence, the Case-Shiller numbers. Okay, there's US numbers starting to come out. It's not quite the 1st of April yet, but that's where they're starting. And then obviously the big cruncher will be the non-farm payrolls Friday. Give the market a blast, right? Always does. And that's where we are, guys. Not a lot of uniformity across the board, but I think we're starting to see some potential here in the commodities and the currencies associated with those, Aussie CAD and Kiwi, and the yen crosses. The yen crosses, I'll just give you a quick bo peep of these puppies because they are starting to look very appealing. Now, I'm not talking like rush in and get short straight away, but these things have got technical levels. You've got a long way to go before CAD yen comes down. and a bit of a way for euro yen, but we've got levels here on all these. Swiss yen's probably out of the picture, but these four here, Aussie yen, Kiwi yen, euro yen, sterling yen, got to be on your radar. Dollar yen starts to dribble lower, these ones will come down with it, with a big thud. All right, that's what my sort of tip is. Outside of that, keep an eye on what's going on. Keep an eye on where the flows are. Okay, the equity markets are coming in and out of flavor at the moment, and there's decent volatility. So there's opportunities in those instruments alone. If you are trading them, the crypto is just giving back a few bucks today, but really still enjoying the geopolitical backdrop that's going on. And the majors, well, it's a bit tricky at the moment. You can see, I always like to see the dollar pairs moving one way and the other pairs moving the other. At the moment, it's a bit cross-border, right? Commodities is where the action is. These things are moving. Check out some of these safe havens as well. All right, don't forget, when we're going to wait, you just got to, we're in a holding pattern until Friday's non-farm payroll. So in amongst that, keep an eye on what the major news is. That's all you can do. You're trying to work out where the pressure points for the market are. So as you go through the various components or sessions, you'll work out where the general feed for the news and trading activity is coming from. Once we get the non-farm payrolls and the other solid US data, that'll be what they'll be talking about. But until then, it's all a bit speculative and a little bit of dribble. All right, have a good one, guys. All the best. Cheerio.